Trade Genius.
What's going on, guys? Philip at Trade Genius. Hope you guys had a great weekend. And I wanted to point out Grayscale, again, gobbling up a ton of Bitcoin. And real quick, guys, if you want the Gbtc indicator, this guy down here tells you the extreme readings on the Gbtc premium. There's a way to trade that, which we go over, and we're going to do a training video on that as well. But if you want that indicator, it's really good stuff. Just head over to Trade Like a Genius. We have these specials there ending tonight at midnight. Only on this one, we're going to throw in the Gbtc indicator for these specials. It's not listed here, but you will get it when you sign up. So just check that out if you're interested in getting that. Comes with all the new signups. That's for 1 year, guys. Very, very economical for this indicator. This is all the Gbtc or Bitcoin added to Gbtc since the halving, 19,879. This is all the BTC that's been mined since the halving, 7,081. So not only they're consuming all of the post-halving mined Bitcoin, they're going into the standing supply that are on exchanges and over-the-counter dealers. So this is very bullish, guys. I can't emphasize this enough. There is a strong move into getting Bitcoin, and I think Grayscale's done a huge job as far as getting legacy investors exposed to Bitcoin via their fund, because it effectively trades like an ETF, because you can get to it like a stock ETF and expose your stock brokerage accounts to Bitcoin. So hugely important. Speaking of Gbtc, we talked about this in yesterday's video. You'll notice that our premiums never really bounced. We're really low here. We're under 7 now, getting to very historically low levels. Now, what's interesting is Bitcoin moved up and the price of Gbtc went down. So we've got a bit of a bearish divergence when it comes to Gbtc versus Bitcoin. And the last time we saw something like that was right over here. So I know I've got a few lines on here. The candlesticks are basically Bitcoin. The orange line, or this reddish line, is Gbtc. The blue line is the S&P 500, and the gold line is gold. So it kind of gives you context of how things are moving together or not moving together. We were grouped here pretty tightly. You notice we've kind of spread apart. Gold's been holding its own. Bitcoin's been doing a decent job, although more correlated to the S&P 500 than, say, even gold has been. Gold's been holding its own a little better. But you'll notice that this bearish divergence looks similar to what we saw here with the reddish line. And it's pulling away where Bitcoin, notice right through here, it was pulling down. Bitcoin was not really agreeing, and then Bitcoin caught down to it. So yeah, I do think there's a risk based on the internals or the technicals of how Gbtc is performing. Demand is fairly low for it due to the premium that we see here, some overall weakness. I will say too that at the end of the day, we saw bonds get bid. What that means is the bonds went up, and usually that doesn't happen when the stock market goes up as it did at the end of the day today, on Monday the 29th. So it's a little bit of it smells fishy. Bonds should have been driving down farther, and they weren't. They were going up. So market goes up, bonds usually go down, or vice versa. So the fact that they both went up together usually tells me that something's fishy, and we could possibly see some selling or sell pressure tomorrow on the S&P 500. And if we do see that, you will see Bitcoin catch down, because we will have to assume it's going to move with the stock market until we see that correlation break. And so right now that's the play. So I think a little bearish look and tone for Bitcoin. As far as looking at the Bitcoin CME gaps, nothing really to phone home about. There weren't any gaps of significance, and certainly nothing in play until we get back above toward this 11,795 gap, which eventually we'll take out, guys. Mark my words. But that's far and away right now, and price action isn't going to get us there anytime soon. Capitulation, we're still capitulated. This is another one over here on the left we haven't talked about, but the beam indicator, remember we talked about this a long time ago, and when you get down toward the bottom of the band is typically the time where you really get long, heavy Bitcoin. We're not there, and I don't think we're going to revisit this band at this point. I think we're going to drift higher, but still, anytime you accumulate Bitcoin in the lower quarter of this band, you do very, very well, and that's where we're at now. And I don't expect a concerted move higher until we break out of this trend line. This is another, basically a lower line oscillator of this indicator up here, but as an oscillator. And when you break above the trend lines on these are really good moves up. So once you get a concerted move over this line, I think you're going to see the next sustained leg higher on Bitcoin. Down here is the NVT. This is like your PE ratio, if you would, how stocks have a price to earnings ratio. This is like basically the PE equivalent for Bitcoin. And you can see where things get overheated, price of Bitcoin will pull back. We're not there, but what we do want to see is this break. Again, another one of those things where when you break a trend line on it, it tends to correlate with a sustained move on Bitcoin. So I think things are building, but we may have some downside pressure first before these longer term on-chain indicators pan out and give us a signal to go long. This is the Bitcoin Delta chart. You guys know what this is. It looks at the Bitcoin futures on BitMEX, and how those are being priced is usually an indication of whether you should be short or long Bitcoin. Blue is that you want to be long Bitcoin. However, we are running into the WMA 65. That's typically a roadblock. And so we'll need to see how price reacts here. But normally I would say if this was in a short condition where you have this lighter pinkish shade color here, this is a total short. So whenever we don't have agreement with which side we are on the moving averages, it's a bit of a neutral stance. So right now, not taking a side here, this is neutral for me, okay? If anything, if we push up, the next thing I would look at, and it really depends on how the delta is continuing to flow. Remember, the dips down to zero typically now are going to be areas that we want to look for a buy. Okay, we've rolled over to the new contract, so that's now that play is in on the table, and we look for that to develop. But for right now, as you can see, anytime we've probed over the 50 line approximately, well, 53 is what I have drawn here, but 50, 53, whenever we've probed above that, Bitcoin's had a hard time staying above that, right? And we're starting to get to that point there. If we approach this 50% fib line, I know it's a little hard to see, but basically it's around this 93.10 level, 93.11. That's going to be an area of interest to get short. You'll notice we had some tops around that level as well back here. And if we go and grab, say, the liquidity that's hiding behind here, because guys are going to have stops back here, retail traders are going to have stops up here, and it comes up and grabs it, and we get into this zone between this 50% and the 618 and 94.25. I know that's a more than $100 range, but I would be looking hard at a possible short entry in there. Unless the delta starts ripping higher, then I might take a pause on that approach. But usually when we enter into, especially when we get a nice decent range like this, we're going to see a rejection in there, okay? This fib pull has been respected at the 382 more or less. So these levels should give us a decent reaction, okay? So keep that on the table or on your radar as we move up, if we move into that area. And then on the daily chart, and I'll leave you guys with this, an interesting grouping here on the stochastics. It's looking, I like it when they group like this. If we can get a nice, decent move down a little lower, I think that's going to be pretty prime for a push up. It's kind of similar to what sets up here, although we got a fairly muted move up. We had dipped below the 200-day moving average, and that somewhat capped the move up because, if you're under the 200-day, then it becomes resistant. So I think that played a part in that, being able to hold it down. But a lot of times you will see a move getting into this situation. You will see an up move. Okay, so just bear that in mind as well. The stochastics are getting bullish. RSI is under 50. That's something to consider. As we drift under 50, that's not very bullish to me. I think it looks more along this kind of setup where you can have a extended move down. If we were looking to get long, I really like it when the stochastics do set up when the RSI is down at these lower levels, and we're currently just not there yet. It is something like this here where the RSI is under 50 but not oversold, and you do have a grouping of stochastic and the stochastic RSI are grouped down here, but not the extreme RSI readings. But if you get both of those conditions, that's a little bit better for the upside. So just something to bear in mind, and also bear in mind that we are still being held down by these longer term trend lines, right? This is from the all-time highs in the end of 2017, right? Big trend line there, can't get above it. Poked our head a little bit above it briefly, but can't get above it. But we get some daily closes above that, guys, and I think that's when you start looking at leaving this area and this structure behind, and then you start making longer term higher highs on the higher time frames, and that'll be pretty exciting to see. So there you have it for this week. Again, the levels that we talked about on the 4-hour chart on those fibs, just keep those in mind. And also keep an eye on the fact that tomorrow is the quarter end and the monthly end. And so sometimes in the stock market, what you'll see is a little push up to make that look good. The move up in bonds is a little interesting, and I only bring that up because that's usually a negative for the stock market, and because of the correlation, will turn into a negative for Bitcoin. So just it's a little tricky there. But just keep in mind tomorrow, last day of the month, last day of the quarter, there can be some shenanigans in the market, and but usually they try to do window dressing, make things look good, push up into it. The following day, so that would be tomorrow's Tuesday. That would be tomorrow would be the last day of the month and quarter, and then Wednesday, the 1st of July. They going into the 3-day weekend. I would just be on my toes if they do decide to start selling back the market. After the quarterly close that's pushed up quite well this quarter. That can be a thing that could play out. And again, that would be bearish for Bitcoin. But at the end of the day, that's going to be a pullback to buy and one for the ages. So just keep all that in mind and in context. All right. So again, guys, if you're interested in the indicators or anything like that, head over to tradelikeagenius.com where we can hook you up with the package there. Gbtc Indicator comes with all the new signups. Until this special ends, which is tonight at midnight. So keep that in mind. All right, guys, that's it for this video. Please hit like and subscribe. Really helps out the channel. I'll see you on the next one. Take care. Bye-bye.
Trade Genius.